Hey, it's Jack from Alpha Charts with a state of the market video. Today is December 3rd, 2022. Before we started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you haven't done so yet, please like and subscribe to this video down below. Subscribing to my YouTube channel really does help me, and I do appreciate that. You also find me at Twitter at AlphaCharge365. Okay. Starting with the SPX, we have a lot of positive price action going on here. Above a still declining 200-day moving average. So we're not out of the woods yet, right? Because it's still declining, but definitely positive price action below, again, the trend line, below a supply area. So the index is to the area where it's have to make a decision, right? And it may just have to chop around a little bit to get things to change, like the 200-day to kind of flatten out, let the 50-day kind of catch up to the 200-day, and then and work through this supply area right there. But overall, I mean, still constructive as long as we're trending above 9-day and 23-day, and there's your 50-day right there moving up as well. So constructive price action. And on the week, I believe it was 1.13%. So positive price action on the week. And then looking at the equal weighted, it was up 0.98. So equal weighted was a little bit lagging the cap weighted, but that's okay. That happens sometimes, but you see the equal weighted is above a flattening 200-day, and there's your rising 50-day. So equal weight is just that much stronger on the charts, right? So that's a positive, right? Let's be objective about this, and it's definitely a positive positive development, right? Equal weight holding up well. So we love to see that. And again, now it's got to hold the 200-day, right? So any pullback, can't really violate this greenish area right there. Looking at the Qs, not the Ws, but not the Ws, but the Qs. We have the downtrend line here, just the weakest of all the indexes, right? And again, it's trying to come up from the underside here into a supply zone. You can see how it was resistance, support, so it's pretty important from a few years ago, and it's still, I think, important. 295 to 300 is the area, and here's your declining 200-day moving average, just about to enter that area. So that's a positive. I mean, not positive. That's potential resistance into coming into this week. 50-day is nice because it's starting to flatten out and maybe even start to curl up a little bit. So any pullback, you definitely want to see the 50-day, and really more likely 280-ish hold, right? If we violate 280-ish, that is going to be a problem. Soon the 50-day will be turning up and into that 280 area anyway, but right now 280 is the area that has to hold on the index level. Again, we may get a pullback because we're coming into supply, but hopefully we hold there. Looking at the weekly chart, it was up almost 2% for the Qs on the week, so outperforming the SPX. You don't see that very, very often recently. Equal weighted Qs was up 2.3%. So equal weighted outperformed the weighted Qs. That's nice to see. Again, shows the rally was, maybe a little bit more broad-based. Again, into the supply area, the equal weighted, it's very similar looking chart to the Qs. Now above the 200-day, which is different than the Qs, right? And now we have to see if it can get above the VWAP from the COVID low, which is this purple line, right? So $70. We want to see price above $70, and I think Qs would be looking very, very healthy. Again, if the equal weights are above 70, that's a really, really strong looking chart. All right, let's look at IWM. IWM back to an area of supply also, but above the 200-day, which is nice to see. As things really shape up, you have the 50-day that's moving higher. Again, turbulent zone though, right? Seller. So yes, it's a very positive price action, but don't be surprised if we see some pullback. Now you can see this area, we have a bunching up of moving averages. Your 200 days at 184, your 9 days at 185, your 23 days at 183. So that's the area that's got to hold, right? And on an absolute basis, 181-ish. Right. So I wouldn't be surprised if we see some volatility this week into that area. That would just make normal price action, in my opinion. So that's what I'm looking at for that, for IWM and MDY. Very, very strong looking chart. Has that double bottom look. Hasn't quite broken out yet, but again, looks really, really strong. You already have a nice 50-day moving average moving up, and the 200-day is, I would consider, declining but flattening, we'll call it, right? As soon as they can get rid of some of this data right over here, it'll start to flatten out and move higher if price can stay above it, right? And then we could have a nice double bottom type of move, right? So mid caps are looking really, really strong. All right, let's go to some important sectors. XLF. Again, has that double bottom look, just like the mid caps. And a lot of these sector charts have a double bottom look to it. But the 200-day is still declining, right? So that's the concern. Even though price is above a declining 200-day, 200-day is still declining. So it may need some more chopping around for this to start to flatten out. That would probably be the best case scenario is a grind into the end of the year, and then maybe a move higher towards the end of the year, and let this 200-day kind of, again, chop around. Nice 50-day move though. So XLF not doing anything wrong at this point. This day right here, so just kind of, you have this kind of broadening formation that you could kind of, so maybe we get a little more volatility coming into XLF. That may be a concern right there. But this, the 23-day, $35 has to hold on XLF. Let's just put it that way. Looking at SMH, below declining 200 days still. So definitely a weaker looking chart. And this has to, but strong move here, now sideways move. And we'll see what happens, right? Price may get up to 245-ish, and that'd be a positive. And then maybe we could start working on some kind of inverse head and shoulder bottoming. But again, that could take, that'd be, this one shoulder took from June to August. So that's a 3-month shoulder. So if it does get up here, it may be first or second quarter of next year before things actually really bottom out for SMH. That's just one possibility. But overall, I mean, positive price action overall. A little bit loose in here. Would have liked to see this a little bit tighter. But overall, positive price action. Still below declining 200-day though, so still suspect. XTN. Below declining 200-day. Yeah, this kind of trend line is still below. So transport still needs some work to be done. Home builders, XHB. And price above a declining 200-day, and into the turbulence zone. So again, still a little bit suspect, even though the 50-day is rising. So we have the indexes, which were looking very constructive, but maybe into a turbulence zone. And now we're looking at the sector ETFs that, again, are looking like they're getting into maybe some resistance as well. So again, I would expect volatility this week. Maybe some selling pressure to come in, and then we'll see how far back the selling pressure works. But in general, the indexes are looking the sector ETFs looking, we'll call it mixed, with SMH below the declining 200-day still, and also transports below declining 200-day. Maybe some supply issues, and still some downward pressure in the sector ETFs. All right, so now let us look at the internals, right? And see what the internals are telling us. Are we going to fall apart, or are we going to go higher? Let's look. VIX. I mean, VIX is at a 19, right? So if we were going to fall apart imminently, I think we would see a giant spike in the VIX. Now, when we've gotten down to this area, sometimes we have seen spikes in VIX, coming in. But right now, listen, it doesn't have to. It could keep going. It could keep going lower, right? It could keep going lower. So it doesn't have to stop here. Maybe we, if we get down to like the 16-ish, that would be more of a contrarian type indicator. And we're heading that way. So we'll see. Maybe the VIX falls a little bit more coming into December, and then we'll see what happens. But right now, nothing to worry about. We're not seeing that spike up in the VIX. Credit spreads. So far, making lower highs and lower lows. Well, not really lows, higher lows, lower highs, higher lows, but still, we'll call it in the tightening range. If nothing else, it's not spiking. And I think that's the important thing with the credit spreads. Let's look at bond yields. TNX. So yields are falling, which means people are buying bonds. How do you want, look at TLT, I guess. So you see how TLT is, ripping really to the upside. What does that tell us? Maybe a flight to safety, right? Maybe. But bond yields falling, I think, in general, is helping the stock market to some extent. We'll see if this, how that plays out. And looking at the dollar DXY dollar index. So dollar index is coming to this area. Let me just put on a weekly chart so it's easier to see. Coming into this green area where we'll see if it holds as support. I mean, it's come down really hard from 113 to 104 from October to December. Now, that has been a tailwind for stocks for numerous reasons, which we've gone over before. But is this where support in the dollar is found, in this 103 to 104 area, right? Because if it is, that could be a headwind for stocks. It's something to really watch, right? If we see price come into this area, about where it's at right now, right? 103 to 104-ish. And then does it spike back up? Is this just a retest of this breakout? We're going to find out pretty soon. And if it is, and we do see this start to move higher again, it could be in this anywhere from 103-ish, 104, 104.50 is fine with me. In that area, then that could be a big headwind for stock. So we got to watch the DXY. UUP probably looks exactly the same. It does. So again, we got to watch that. And that's on the weekly time frame, right? Yeah. All right. Let's look at put call ratio. Put call ratio all over the place. I've had on my Twitter feed, at least anecdotally, big time bulls, big time bears. And so everyone is not on the same side of the boat, which means that there is a chance for the market to melt up. That's as simple as it gets right there. And then percent stocks above the 50-day, and breadth is very good and looks like it's expanding. Once we get into this 80% level, that's maybe where we get some pullback. So we'll see if we can get that way. I mean, last time we did that was back in August, and then it kind of fell apart. But there's been times where it could stay up here for a little bit of time before it kind of pulls back. So maybe a little more move to the upside. But, again, a melt up into December could be, we're December 3rd today. So maybe over the next few weeks. And then we'll see what happens, right? So the internals, they're not looking bad. They're looking fine. They're not, we're just maybe getting a little extended into this run, which is, again, it's not very objective. I don't know if it's, I guess it is objective, but yeah, we went from a 16% move basically in October, November into December. Maybe we get up to 20%. Who knows, right? We get into this green zone, but eventually there'll be a pullback, and I think that's where a lot of information will be taken. So, when we pull back, does it pull back and on lighter volume and into moving averages, or does it really pull back and start falling apart? But for now, there's no reason if you're in positions to just ride the positions higher, right? As long as it's going to move higher, because we don't know if it's going to be next week that the market starts to fall apart and pull back, or if it's going to be 2 or 3 weeks from now, right? So with that being said, ride them higher, and if they pull back, then the market's giving us information. But for now, things aren't falling apart. Indexes look good, internals look fine, the sector ETFs look okay. So again, we could melt up through December, through Christmas. Who knows? Maybe it doesn't zoom higher, but maybe we chop higher, right? So overall, who knows if it goes up 4 or 5% for the month of December, being in the strongest sectors, maybe we can get some alpha, some profit from that melt up. Okay. Anyway, hope you guys are doing well. Hopefully, you guys are making some money in the market, and have a great day. Bye.